I'd love to get your insider thoughts on just what kind of dialogue is happening right now, given today's inflation print, and how much it will weigh and how much it will influence the Fed's decision, or is it a foregone conclusion?
Well, the incoming data is always relevant, but I think this time around maybe less relevant than in the past. And the reason is that Chair Powell and others have clearly indicated that another, what they describe as supersized raise is called for, and the market is pricing in 75 basis points. I think credibility would call for them to move 75 basis points. Given the fact that the market has basically priced that in, there shouldn't be, too much of a reaction in the market. So I think this time around, what has been signaled is what's the most likely outcome. I agree with the market consensus, probably, 85, 90% likely that we'll see a 75 basis point move when they convene next time.
Roger, I'm glad you brought up the word credibility, because it's a word I've heard a lot from a lot of the sources I talk to, a lot of the market participants that I engage with on a regular basis. They use that word with regard to the Fed, and many times, more often than not, it's about the Fed not having credibility right now. In your mind, I understand that you're a former member of the Federal Reserve, but in your mind, does the Fed have a credibility problem right now?
I think the Fed had a credibility problem in that they started relatively late in making these moves. Obviously, there are many in the marketplace and in academia that were saying, well, this inflation is maybe more persistent than transitory. But I think they've regained that credibility at this stage. And the evidence of that is that both short-term and longer-term inflation expectations are relatively well anchored, roughly in that 2% range. That is their target, slightly above, for sure, not exactly at 2. So I think markets are indicating that the Fed is serious, and markets believe it. Additionally, there was some survey data from the New York Fed just the other day that showed many consumers in that survey expect inflation over the longer term to return to something closer to the Fed's target. So I think the issue of credibility now is not that markets don't believe the Fed and being very serious about the 2%. It's the credibility of having to deliver once you make bold statements in the public domain.
Roger, a lot has been said over the course of the last several years about the Fed becoming data dependent. It is data dependent. We know the economic data factors a lot, especially things like the CPI data today. I wonder, you mentioned also some of the market indicators, break-even rates and whatnot, things that are happening elsewhere, commodity prices. When it comes to the discussion behind closed doors at these FOMC policy meetings, which comes up more often as an influencer of policy decision? Is it the economic hard data itself, or is it more of what's happening with the marketplace and the reactions to some of that data that drives a lot of that Fed discussion?
I think it's much more the economic data in terms of what the economy is actually doing, and also the survey data. So we've heard Chair Powell and others talk about expectations. Look, I think the Fed fully understands that the market itself is filled with all sorts of cross currents. There are many factors outside of the Fed's control that drive the market. And finally, most importantly, the Fed is focused on its core mission, and its core mission has to do with maximum sustainable growth and low and stable prices. That core mission does not focus or run through whether or not the markets themselves are up or down. And in fact, the Fed recognizes that market movement may be the result of some of their actions. It's not the target of their actions. So it's the core data, the real economy, inflation expectations. Those are the things that are being talked about at the table.
Roger, before we let you go, in your expert opinion, has inflation peaked?
It may have peaked in the technical mathematical sense that we're not going to see it continue to go above, let's say, the headline 8.5 from the last time. Having said that it might have peaked does not mean, however, that is the clear and convincing evidence that Chair Powell said he needed to be sure that the job is done. And so I think there might be a slight disconnect between enthusiasm in the marketplace that, oh, inflation has peaked, suggesting a near-term pause or something of that sort, versus what the Fed said it wants to see, clear and convincing evidence of a return of inflation somewhat dramatically closer to that 2% number. So that's why they keep talking about the job is not yet done. Markets may not be hearing that as clearly as the Fed would like.